Hello everyone, welcome again. In this lecture we are going to look at the trading losses. Now earlier we looked at the trading profits on which we have to pay tax. What if we have incurred a loss? Will we get some benefit from HMRC? Yes, we will get some benefit. So say for example, if I have incurred a loss in this year, HMRC says that if you have any other profits against which you can set off these losses, then you can do so. Now what does the setting of the losses means? Now if, say for example, I have trading profits this year, trading losses this year. So if I have trading losses this year, then obviously I will not have to pay any tax because I have a loss, I do not have any profits. Apart from these trading losses, I might have any other source of income on which I will have to pay tax, say for example property income, right? So I have a trading loss this year, but I also have property income in the same year. So what HMRC says that instead of paying tax on the property income, you can reduce that property income by this loss. So this loss will reduce the property income so that we will have to pay either less tax or we will not have to pay any tax at all. So that's what it is called trading loss reliefs, which means that the profit on which we are going to pay tax, them profits will be reduced by the losses, and eventually we will have to either pay no tax at all or we'll have to pay reduced rate of tax. So that is trading losses. Now how can we relieve the losses? There are different ways in which we can relieve the losses, and there are different types of losses as well. So now we will look at the chapter number 11 excuse me, chapter number 11 of F6, and then we will we will read the notes, and on page number 26 of your lecture notes, please. And please remember, these are the loss reliefs for individuals. For companies, loss reliefs we will see later when we move to the companies. Right? On page number 26 of your lecture notes, trading loss reliefs. Now, very common one is to carry forward. The first one, which you can see on your screen, carry forward trading loss relief. That is the very common one. So what happens that if you have any trading loss now, you can carry forward that trading loss so that whenever you have any profits in the future years, you can reduce them profits, so you will have to pay less tax, right? Say for example, if I have a trading loss of £1,000 this year, and in the next year I have a £1,200 profit, so this £1,000 will be set off against the £1,200 profit of the future year. So this £1,000 will reduce the taxable profit next year, so the eventual taxable profit will be just 200. So 1,200 profit less the loss which I have this year, so whatever the difference is, £200, that will be the one on which we have to pay tax. So that is called carry forward trading loss reliefs, which means that if I have a loss now, I can carry forward that loss until this whole loss is set off against the future profits. So if I have, say for example, £10,000 loss, I will set off in the next year. If this loss has reduced that profit to zero, then if there is any other loss still left, and any loss still remains, then I can carry it forward to the even next year, and the next year, and year after that likewise, so until the whole loss is adjusted and whole loss is set off. So as you can see on your screen, trading losses not relieved may be carried forward to set off against the first available trading profit of the future years. Losses may be carried forward for as many years until the whole loss is relieved. And when we carry forward, we will set off against the trading income of the future year. Now please remember in the losses that there will be different things. One is capital gains, one is trading profits or trading income, another one is net income or total income. So they are all together, they are all different from each other, because total income is income which is trading income, property income, employment income. So it is accumulation of all these is called total income or net income. However, when I talk about trading income, it is only a business income. So whatever income I am earning from business, that is a trading income. When I talk about a net income or total income, that is whole lot, including of inclusive of trading income, property income, business income, interest income, dividend income, everything. Right now, as you can see on your screen, next next type of loss is trading loss relief against net income. Now, the earlier one which we have seen earlier, the first one, which was the carry forward loss relief. Now, when we carry forward, we can only set off against the trading profits of the future years, right? As you can see, just above that, I will just show you this one. As you can see, carry forward against trading income. So we can only set off against trading income of the future years. Now, this loss which we are going to study now, it can be set off against the net income, which means total income. So if I have a loss, I can set off against the total income. But total income of which year? So let's read. Trading losses may be set off against total income of the current year, and in addition or instead, relief may be claimed against net income of the preceding year. Now, what does it say? That we can set off against current year. So if I have a loss, which is a trading loss, I can set that trading loss off with total income. Total income means all other incomes in current year. And if there is any loss still remains, then I can carry it back and set off against the previous 12 months, right? Or if I do not want to set off against the current period, I can do in the previous year. So then I will do against the current year. So whichever way I prefer. Right after that, it says a claim for loss must be made by 31st January, which is approximately 22 months after the end of tax year. So you must have to claim. The taxpayer cannot choose the amount of loss to be relieved, therefore the personal allowance may be wasted. Please remember, what is a personal allowance? Yeah, personal allowance is annual exemption for every individual in the UK. So what we do is we take the total income and then we deduct the personal allowance, right? So net income before personal allowance, then we deduct the personal allowance out of that. Now, when we are setting off the losses, then the whole amount of profit will be set off against the loss, right? When I set off the whole profit against the loss, it means that the personal allowance will be wasted. Now, say for example, if I have a profit of £10,000 and I have a loss of £10,000 as well. Now, if I am setting off this loss against the current year's profit, there is no benefit, because this profit of £10,000 was already covered by the personal allowance anyway. I was not going to pay tax anyway. So there is no benefit to set off against current year, right? So what does it mean is that whenever we are setting off the loss, it will waste our personal allowance. So we'll have to set off the loss against the whole profit, not just selective amount, not just the top amount, not just the excess of the personal allowance, right? So we'll have to select the whole amount, which means that the personal allowance may be wasted. So, however, the taxpayer may choose to claim full relief in the year of loss and then the remaining loss in the preceding year. Or full year in the preceding year, full loss in the preceding year, and the remaining loss in the year of loss. So whichever way you prefer, you can do so. You can do it first against current year and the remaining in the previous year, or first against the previous year, then remaining in the current year. So whichever way you prefer, it's up to you. Right? Now after that it says, where loss relief is claimed, where loss relief is claimed against total net income of the tax year of loss or the previous year, taxpayer may claim a future relief to set off loss against his chargeable gains before annual exemption. Now we haven't studied the chargeable gains yet, but it is another type of income, right? So which are chargeable gains. So whenever I am selling any asset, because if say for example, if I have this iPad, I am selling this iPad, and if I am selling it on the profit, that is my gain, that is my chargeable gain, right? Now in capital gains tax, we get another personal allowance, another type of exemption. Now in income tax, it is called personal allowance, whereas in capital gains tax, which is our second topic which we will study, in capital gains tax, annual exemption is the name for personal allowance, right? Now say for example, if I am living in the UK, I will get annual exemption for capital gains tax purposes, but I will also get personal allowance for my income tax purposes. So I am eligible for both of them, right? So what does it mean is, in the notes it says that I can also set off the losses against chargeable gains, right? Now when I am setting off against chargeable gain, again, the annual exemption amount will be wasted, may be wasted, in the same way like we may waste our personal allowance. So the annual exemption amount may also be wasted, right? So we have different options, I can set off against current year profit, I can set off against previous year profit, I can set off against current year profit, and after that I can set off against current year chargeable gains. I can set off against previous year profit, and after that I can set off against previous year's chargeable gains. Then I will come to current year. So whichever way I prefer, I may choose, it's up to me. And there are different options you will have to think about from all of the different perspectives in the question. Right, so it says before annual exemption of that year, the trading loss is first set off against the total net income, and only excess losses set off against the chargeable gains. Which means that you cannot set off against chargeable gains first, then against net income. No, you can't do that. You will have to set off against the net income first, then any excess loss will be set off against the chargeable gains. Trading loss is not relieved in any other way. You can carry it forward for the future years to set off against the trading profit of the future years, as we have seen in the first case. Right, now these are the options which are available to us. The option to set off the loss. So for the current year, if you look on the left side, first option is against the current year against total net income. I can do that. After that, previous year against total net income, then carry forward against trading profit of the future year. Right, so first I will do against current year's total net income, then previous year's total net income, then I will carry it forward to set off against the future years not net income, trading profits. Right, so then the second option is that previous years, I will first do against the previous year's net income, then current year's net income, and then I will carry forward for the future year's trading profits. If you look at on the right side, that is third option I've got. I can set off against current year's net income, then current year's capital gains, then the previous year's net income and previous year's capital gains. After that, if there is anything still remained, then we will carry forward to set off against the future year's trading profit. Right, so these are the different options. Now, a couple of losses which are a little different than these. First one, which is on page number 27, as you can see on your screen, trading losses in the early years of trade. Now, whenever you have started your trade, whenever you have started your business, if you have incurred any loss in the early years of trade, that is called early year loss relief. Now, that loss can be set off against the net income, net income, because you do not have any trading income that time anyway, right? So let's see in the notes. If the trading income is, if the trading loss is incurred in any of the first 4 tax years, so the criteria is first 4 tax years. So if you have incurred any loss, you have started the business in the first 4 periods, in the first, excuse me, in the first 4 years of trade, if you have incurred any losses, that can be set off against the early year loss relief. But how can I set it off? Then the trading losses can be carried back against the total net income of the previous 3 tax years on the FIFO basis. Now, FIFO basis, you might have seen it in F5 or F2 paper if you have seen. Basically, FIFO simply means first in, first out basis. So you will take the earliest year first, then the next year, and then the third year. Right? So basically, it is a loss which we have incurred in the first 4 years of starting the business, and that loss can be set off against the total net income of the previous 3 tax years. Right? Now, why does it say total net income? Because we have no trading profits anyway, because we are already in the loss, so we cannot set off against the trading profits. So we'll have to set off against total net income of the previous 3 tax years. So it is called early year loss relief. Now, just opposite to that, just exactly opposite to that, is called terminal loss. Now, what is terminal loss? Terminal loss is the loss of the last 12 months of the trade. Now, when you are trading, last 12 months of your trade is, if you have incurred any loss, that loss is called terminal loss. Right? Now, what is the terminal loss? Loss of the last 12 months of the trade. Now, what happened that because you have ceased the business, you have been working fine, but in the last year you incurred some losses, and then you decided to cease your business. Now, if you have any losses in the last 12 months of the trade, and that is called terminal loss. Right? Now, if the trade ceases, then terminal loss of the last 12 months of the trade can be carried back against the trading income of the previous 3 tax years on LIFO basis. Please remember, because it is last 12 months of the trade. So in this time we will do the LIFO basis, which is last in first out, which means the latest year first, then the earliest year, and then the very earliest year, right? And we can set off against the total net income. So if the trading loss occurred in any of the first, not this one, if the trade ceases, then the terminal loss of the last 12 months of the trade can be carried back against the trading income of the previous 3 tax years on LIFO basis, right? So what we do is we'll take the net trading loss in the last 12 months of the trade, and then we'll add overlap profits into it, and then the net amount is going to be our terminal loss, right? Now, as we have seen in our basis period, as you know, the overlap profits are deducted out of the profits. So if there is a profit, overlap profits will be deducted out of the profits. However, if it is a loss, then obviously overlap profits will be added in the losses, so that's why it will be added. And then finally, the 3 important points when deciding about the loss relief. Please remember that earliest, if you claim the loss relief early, that is better, because you claim early, you don't know about future anyway, so what's going to happen tomorrow you don't know. So if you just carry forward, it's no good. It's better to set off in current period or the earlier periods. Another thing is that you must waste least amount of personal allowance if you are going to waste any at all. First preference would be that we will try not to waste any personal allowance, because personal allowance will be saving some huge amount of tax anyway. So we'll try not to waste any personal allowance. But if we have to, then we'll try to waste least amount of personal allowance. So it says earlier loss relief is better than the future period. Then the best loss relief is in which the maximum tax is saved. So it is obvious one. So the best loss relief is the one where we save maximum amount of tax. And finally it says best loss relief is in which the least personal allowance is wasted. So that was our losses, and in the next video we will look at the partnerships, but excuse me, let's do a question on losses. Excuse me. If you move to a page number, I don't know what's the page number, but question number 83 of your BPP exam kit, please. Question number 83, Michael and Cian or whatever. This question was examined in June 2012, so if you have any other exam kit, make sure you come to this question. It was examined in June 2012, and its name is Michael and Cian, or Son or whatever, Sean. So you are a trainee ACCA, and your manager has asked for your help. So regarding 2 taxpayers who have both been incurring some losses. First individual is Michael. Michael commenced in self-employment on 1st of July 2015. Now 1st of July 2015, could you please tell me which tax year is it? Yeah, 15-16. So this is the tax year 15-16. So he has started his self-employment. Now please remember, self-employment is a business, it is not employment. So you are working for your own self, you're not working for someone. So he started self-employment in tax year 15-16, preparing accounts to 5th of April. His results for the first 2 periods of trading were as follows. The first 2 periods of trade were as follows. The first period of trade was for 9 months, which is ending on 5th of April 2016, and he made a loss. He incurred a loss of 25,230. And after that, in the year ended 5th of April 2017, he made a trading profit of 9,665. Now, if you remember from your notes, which we have seen minutes ago, because his loss is 25,230, this loss is in the first year of trade. We know that if there is a loss in the first 4 years of trade, then the earlier loss relief can be claimed, right? So, and we know that earlier loss relief, how can we claim it? Earlier loss relief can be claimed against the previous 3 tax years, so previous 3 tax years, but however it will be on the FIFO basis, first in first out basis. Now first in first out basis means that earliest year first, then the second year, then the third year, right? So after that, he's got some trading profit as well, 9665. For the tax years 11, 12 to 13, 14, his employment income was as follows. And then it says Michael did not have any income in the tax year 14, 15 and part of 15, 16. And then he tells us the second person's information. Let's read the requirement. For each of the two taxpayers, Michael and Sean, identify the loss relief claims that are available to them and explain which of the available claims would be most beneficial. So just tell him that how many options he's got to set off the relief. One common option, most common option is that he can first set off against the current period trading profit current period net income, and then anything left he can carry forward for the next year. He do not have any net income in this year, so this option is not a valid option. However, he can carry forward for the future year. So if he carry forward in the future year, he will have only 9,665 in the next years, which means he cannot set off the whole amount. And another interesting point as well, because this is 9,600 something, this will be covered by the personal allowance anyway. So there is no benefit of carrying it forward in the next year, because we will be wasting the personal allowance, because this 9,000 something will be covered by the personal allowance anyway, so it is no good to carry forward. Now let's look at the previous year's profits. So another option is that we can set off against the previous year's net income. Now let's see if he has got any previous year's net income. Which tax year is it? Which is the tax year of the loss? Tax year of loss is 15-16. So the previous year is going to be 14-15, and it said in the notes, and at the end of this requirement, at the end of this portion of the question, that Michael did not have any income during period from 6th of April 2014 to 30th of June 2015, which means he did not have any income in the tax year 14-15. So this option is also not available because he do not have any net income, right? So which means that we only have one option. So we can set off against the early year loss reliefs, and early year means the previous 3 years. So previous 3 years means previous 3 years from the year of loss. So the year of loss is 15-16. So the previous year is going to be 14-15, 13-14 and 12-13. So from 12-13 to 14-15. Now we know that in 12-13 he got 19,365 of the profits, employment income, sorry, and then he got 50,095 in the next year, and he do not have anything in the tax year 14-15. So in 12-13 he can set off this loss of 25,000 first in 12-13, so which will reduce the profit of 19,365 in tax year 12-13. So in 12-13 the profit will be zero then, because it will be reduced by the loss. Now the remaining amount of loss can be set off in the tax year 13-14, right? So that is a way to relieve the loss. Now we will also have to tell the examiner that how much tax we are saving. Now we know in the tax, if you look at the tax number 12-13, 19,365 of the employment income, right? So he got employment income 19,365, right? Yeah, so 19,365 is the employment income, which means that we will be paying tax at the rate of 20%. So we are saving tax at the rate of 20% in 12-13. If we look at the, give me 1 second. If we look at tax year 13-14, in tax year 13-14, we will be saving tax at the rate of 40%. Reason is because we will be saving tax at the higher rate because his income is in the higher rate band. His income is 50,095. So when we will reduce his income, which means we will be saving his tax at the rate of 40%, because in excess of 31,000 something, we will be reaching in our higher rate band anyway. So we will be saving him tax at the rate of 40%, because he's got employment income. right? So that's done. If we look at the second person, which is Sean or whoever, I don't know how to pronounce their names. So Mr. S has been in self-employment since 2006, but ceased trading on 31st of December 2016. Sorry. So he ceased trading on 31st of December 2016. He has always prepaid accounts to 31st of December. His results for the final 5 years of trading were as follows. So these are the results for his final 5 years of trading. And in the final year, if you see, in the final 12 months of the trade, he has incurred a loss, which means it is a terminal loss. Why terminal loss? Because it is a loss of the last 12 months of the trade. And just beneath that, it says for each tax year, he's got property business income of 11,200, and then it says Sean has unused overlap profits of £3,600. Please remember that, as I said to you earlier as well, these overlap profits will be added in the losses, so it will be added in the terminal loss. However, if it would have been profit, then we will deduct it. So it will be added 3,600 plus 23,100. That will be our loss in the last 12 months of the trade. That is terminal loss. Now this terminal loss can be set off against the previous 3 tax years on a LIFO basis, last in first out basis. So the LIFO basis is going to be 3,700 and then 18,900, and if there is anything remained then from tax year, then in 14,000 from the profit of 14,400 in the year ended 31st of December 2013. Right? So we can set off like this. Now it will also, in this case as well, we will also have to tell them that how much tax we are saving in each case. Now if we look at in the year ended 2015, trading profits are £3,700, and so we'll be saving tax at the rate of 20%. And in the previous year, if we see trading profits are 18,900. In this case as well, we will be saving his tax at the rate of 20% as well, because property income will already have used the personal allowance anyways. We will be saving tax at the rate of 20% in this case as well. Right? So that's it for this question and this video as well. So these were the answers which I've told you. I've just gone through the questions. I haven't attempted on the board. So you just try to attempt it yourself, thinking about different ideas, and then go back to the exam kit as well, and you might find something additional information as well. So always go back to the exam kit so that you can see the additional information about these questions. All right. So that's it for this video, and I will see you in the next video, and then we'll see our next chapter, which is on the partnerships. Right. Thank you very much, and goodbye.